Hello guys, welcome to my channel. Today I'm gonna teach you how to use Fibonacci retracement. But before we start, there are certain things that we need to look for before we plot our Fibonacci retracement, right? Before I grab Fibonacci retracement, I want you to look at certain things, right? So when you put in your Fibonacci retracement, you got to know how to identify the swing highs and swing low, right? So swing high is in like this is the highest place where the price went, and swing low, this is the lowest point where the price did before where the price went before it went up. So you should be able to identify that, which is like simple and straightforward, right? But now drawing a Fibonacci retracement in such incident, like look at how far is this like price at the moment. It's a bit far, like from here to here. Imagine if you're using sort of a tre not tre or like sort of a daily time frame, you probably be sitting I don't know how many weeks, right? So what I normally do is obviously this, if I were to take this in a probably daily or higher time frame, it's gonna show me a trend, right? It's gonna show me a trend. So I'm gonna go back to H4, right? I'm gonna go back to H4 now. So since it's showing me a trend, obviously a trend has got higher highs and higher lows, right? So this, I'm gonna remove my trend lines. I'm gonna show you. So this and that on a lower time frame, they are swing highs and swing low, but on a higher time frame, they are not, right? So when you're drawing your Fibonacci retracement, those are the places that you need to keep in mind, that you can also draw your Fibonacci retracement using a swing high and swing low that is not the highest or that is not the lowest, right? You just have to look at the significance of the currency of the trend, right? So when I'm thinking about significance, I'm talking about how aggressive was the move, right? So let me give you an example. You have from a move from here to here, and then what do you have here? Here you have a pattern, right? Price came here and then bounced, and then came here, bounced and pushed up and pushed up. But when you look at what happened here, we really can't see what happened here. Yes, it retraced a bit, but it's not major. You can compare. You can compare this place, this little retracement, this little pullback with this pullback, with this pullback. You see that the price did something here compared to here, compared to this place. So that's why you need to be able to identify those kind of retracements, because that's what you're gonna use to plot your Fibonacci retracement, right? So for this one, I'm gonna show you. I'm gonna use this area here, right, as my last low before the price went up, right? This place here. This is last low before the price went up, right? I wouldn't use this because this is not a major. This for me it's very small. It's not even convincing, right? I'd rather use this one. But the issue is if I use this one, right, for me, from the price after bouncing here, it came here, right? Then it came here and broke this high. So that's why now that high is no longer valid. So that's why I'm not using this one. That's why I'm using this, right? And before the price could come here, where did it go? It came here, right? That's why I'm plotting my I'm plotting my other line, right? My resistance line. So now I'm gonna come, and now that's where I'm plotting. Since I've got two areas whereby I'm gonna plot my Fibonacci, now I can grab my Fibonacci and plot it, right? I'm gonna come here, go Fibonacci retracement, and if you are looking for, since the price is going up, obviously we're looking for the buys. So you're gonna drag your Fibonacci from swing high to the low of your price, to the swing low, then boom, right? Now I've plotted my Fibonacci. So now that I've plotted my Fibonacci, I'm waiting for a price to come back to certain areas, right? So Fibonacci have got three major areas. It's got 60, 61, 61.8. It's got 0.5. It's got 38.2. So this is 61. This is the least. This is the minor area whereby we expect the price to bounce and push up, right? And then we have this one, the middle one, which is 0.5. So normally before it bounces from here, it will do a retest. It will bounce and go up and bounce, then push up, right? So on a 382, 0.382, this area here, this is the major one. This is where most of the time it will bounce once and continue, right? So that's where we normally enter. So if it comes and bounces twice here, what I'll normally do is I'll take a trade from here, put my stop loss right underneath the 38.2, because obviously my entry will be on 0.5, and then my TP, I'm gonna show you where the TP is, because it's gonna be TP for all of them. I'm gonna show you where TP is. I'm just showing you the stop loss at the moment, right? If it comes to 38.2, I'll just put it right here, and then at least in between the thingy, in between this area here, so that obviously in case things don't work out, because obviously in Forex not all the trades work out, right? Not all the setup work out. So let's say I've got my entry here and my stop loss here. I'm gonna have to change the time frame so that I can show where to put my TP. So my TP is here, right at the end of this blue line on my 618. So when you catch this kind of trade, you're looking at 1 to 5 raised to what? So that's one of the good trades. So yeah, that's how you use the Fibonacci retracement. If you are still in, if you like what I'm doing, don't forget to smash the subscribe button. And then if you've already subscribed, please leave a comment below and let me know what else you want me to teach you about in Forex. Yeah, see you next time, guys.